Welcome to Module 3 of the Fearless Farm Finances series. In Module 3, we're going to talk about farm data collection and organization. So we're going from the big picture of figuring out your farm and goal setting, now starting to narrow it a little bit into the details of collecting and organizing your financial information. I am Amy Schomburg, a farm business management instructor with Western Technical College based out of La Crosse. So in this module, two main things that we're going to talk about, or I kind of have them organized into two sections. So getting organized, bookkeeping tools and basics, and then the second half, setting up your financial records. Under the getting organized, bookkeeping tools and basics, we're going to talk about these following bullet points. So bookkeeping versus accounting, setting up your bookkeeping area, setting up for all of your data entry, gathering your financial information, managing bills, tracking amounts due, filing your receipts and other bookkeeping papers once you have paid them and then entered them. And then finally, but not least, is hiring out your bookkeeping. So maybe or maybe not. Maybe that makes sense for your farm, or maybe that doesn't make sense. And we'll cover a little bit of that towards the end. All right, so getting organized, bookkeeping and accounting. I get this question a lot from some of my farmers that I work with is, what's the difference between bookkeeping and accounting? Isn't it all the same? This is just a basic description. So bookkeeping is the act of recording your day-to-day transactions of the business. So making sure you get all your bills paid on time, that it's the correct amount, that you've signed it. And then the accounting is probably the next step of that. So it describes all of the work of building on and interpreting the information that is put together through your bookkeeping. So putting together your tax returns and analyzing your farm's financial performance, budgeting, planning for the next year. All of those things I tend to lump into the accounting category. We're doing a lot of accounting right now on some of the farms with the bookkeeping numbers they've done. As I'm recording this, it's the end of October, and we're starting to plan for the following year. So making budgets, making a cash flow plan, all of those things would fall under the accounting aspect in your farm business. So some of you might get really excited about this and some of you might not. But one of the first things that is really important in getting organized is just simply setting up your bookkeeping area. Making sure that you have a place that's comfortable and secure. And if you can, having your own farm financial desk, having the desk that is designated that this is where you or someone who in your operation is designated as the bookkeeper / accountant is going to sit down and want to do this work. That's actually one of the first hurdles sometimes at our farm even is we have, my desk has a couple piles on it. Do I really want to tackle the piles or do I not want to? So making sure that that's a comfortable, secure area. I would invest, if you don't have one, but a file cabinet or a storage box away from your family, away from other documents that are important but aren't part of your financials. And in the file cabinet, to have colored and manila envelopes will help you keep things separate and organized. And you'll, in a couple slides here, we're going to talk about a tickler system, and those colored and manila envelopes might be part of that. But it's just good to have those on hand, that you're ready to go, that you have all your supplies, so that once you start getting organized or starting to set this up, that you have those. An up-to-date computer, if you are using a computer, we're definitely within the Fearless Farm Financials, We're not saying that you need a computer. There are advantages to having a computer. So if you have a computer, an up-to-date computer with a good-sized monitor is really helpful when we're dealing with all of the financial programs, seeing the numbers, seeing them big enough. And when you have a team of people, sometimes a big monitor, you can blow it up, and so that 2 or 3 of you can sit around and see it. Also, a keyboard with a number pad on the side. You guys have probably all seen these. It's on the right-hand side, and it's just easier to enter your financials with that versus on trying to reach above all of the letter pads to get to the numbers. If your keyboard doesn't have it, usually you can buy a number pad fairly reasonable at any of the computer or office supply stores. A calculator. Calculators come in handy. Yes, we realize that all the computers have one, but if you're not using a computer, calculators are handy. And even if you are, sometimes a calculator with the paper ribbon can be helpful, especially if you're adding up all the numbers. You can go back, you can check, you can make sure that you entered everything in that you wanted. Another piece of equipment that is usually pretty important and helpful in setting up your bookkeeping area is a printer. So there are multiple times that people haven't had printers, and I actually carry a portable printer, and whether there's 2 or 3 people looking at numbers, sometimes it's handy for everyone to have them in front of you. And you can print any reports or anything that you're working on. The other thing that I noted in here is pre-printed checks. Quite a few farm businesses now within their farm program have gone to printing all of their checks out of those computer programs. So if you are going to go that route, just making sure that you have pre-printed checks that are already set up and that are aligned with the computer program that you're using is really helpful in getting organized and staying on top of all your farm finances. And then the last thing that was noted on here is just a copier or scanner. They come in handy there again, making duplicates of papers. Maybe someone brought in a report that you want to copy or scan, or production records. Maybe it's just simply a copy of a bill. The one thing that many of you will probably see is once in a while, you'll start getting receipts that fade really easily or are smudged already. So there are times that when I'm actually helping farms going through their bookkeeping process and doing the data entry, if we see a receipt that's already starting to fade, we'll actually just make a photocopy of it so that if it's an important receipt that we know we're going to come back to, or maybe it has some other detailed numbers on it, that we capture that before it actually kind of disappears. So, and I'm sure you'll find plenty of other reasons that all of these pieces that I've listed above will have multiple benefits, and you could probably list some too, but those are the basics that when you're setting up your bookkeeping area that are important. All right, so getting organized, setting up for the actual data entry. Plan for your data entry weekly. So I think the biggest reason that weekly data entry is you just put it in your calendar is it actually takes less time. So we farm as well, and it takes me about 20 minutes each week if I do it weekly. And it seems like if I let it go 2 weeks, you'd think it'd be 40 minutes, but it's not. It seems like it adds more time. The second reason to plan for weekly data entry is just the timeliness of it. You can still remember what happened within the week. Let's say you get a receipt. It has the date, it has the amount, but maybe you want to capture how many animals were sold with that receipt. Maybe you want to capture what it was for. Maybe it needs to be broke down further. You can still do that. And then lastly, you can catch any bills that have a 10-day due date. And this is beginning to be more popular. It used to be a lot of the farm supply stores or any of them that you would charge something to would be 30 days. Well, in the last few years, we've noticed more and more have gone to 18 days or 10 days. And so if you're opening bills and doing all of your data entry weekly, you can get these bills that you might only have a day or two left to get them paid on time if you're doing it every 7 days. All right, so gathering all of your financial information, and this goes back to that second slide and just setting up your space, but develop a system that works for you. Same thing, develop an office that's comfortable, secure, When you're entering and gathering your financial information, same holds true. You have to do what works for you and your farm. All of our farms, the financial information comes in through a variety of ways. So some's going to come through the mail, some comes through emails. If it's like some of ours, some comes through dirty pockets, whether it's receipts for repairs, receipts for feed. And then, of course, there's always some piles that are collected in vehicles or outside buildings. So I've seen some where on vegetable operations, everything goes to the pack shed, so all the supplies are delivered to the pack shed. So they just have a place in the pack shed that all of their receipts are gathered, because it's not just one person in the pack shed sometimes. Same with feed or anything that's getting delivered to your farm. If you have one spot that it goes to, then it's easier to just keep track of. Keep your system easy to use, secure, and obvious. Now, secure and obvious and easy to use might kind of seem contradictory at times, but it is important so that, like I said, if it's in an outdoor building, so that it's not getting wet, it's not blowing away, it's not getting ripped on, half of it's ripped. It's important to keep it in an obvious spot so that it happens. And maybe that you're not even around, but the drivers of the supply companies know that it goes here. It's a big yellow envelope. It's attached, with a magnet, and they can just clip it in. I've noticed some of the fuel companies actually have what kind of looks like a big water bottle, and they put their receipts in there, and the farms know that every time fuel's delivered, the receipt's in there. So it's just simply easy to go unscrew. It keeps it dry out of the elements, and that they can get it then when they're starting to file all that stuff. Try a system out. If it doesn't work, do something else. Ask other farms what they're doing. You're going to find a lot of, it's not working, but make sure you go to the farms that it is working and see what they use, and maybe you mesh two systems together to make it work for you. I really like file folders, wire baskets, collapsible files, shoe boxes, whatever works. I put a note in here, a 9 by 12 inch. Some of the bills you'll notice don't fit the standard 8 by 11. Sometimes they're bigger. So just having a bigger box that it all can fit into. And like I said, if you're doing it weekly, a lot of times it doesn't add up, but some weeks it might all add up, especially if it's the first week or the last week of the month. When you're gathering your financial information and going through your income and receipts, is there enough information on the piece of paper? Is the date on there? What is it? Like, what did they purchase? What got purchased? Or what is it for? If you're trying to do some enterprise analysis later on, and we'll talk about that in modules that are coming up, do we know, is that for calves? Is that for carrots? What is that for? Who it's sold to or who you're buying it from, is that on there? So I give the example of the bullet point oil. Okay, so it's a receipt for oil. Is it hydraulic oil? Is it motor oil? Is it feed grade oil? Is it oil that's going to go in another, in the fly spray mix? So it can go to various enterprises. It can be used for various things. Knowing what it's used for, knowing maybe you're tracking the gallons too. All of those things, making sure that that's all captured right when you're looking at it. The next bullet point, open all mail and sort accordingly. There's a lot of organizational blogs and podcasts and stuff out there, and it's kind of one of those, they say it's like the 5-minute rule. If you can do something in 5 minutes and then you don't have to touch it again, do it, because it'll save you time. So opening mail for me kind of goes into that bullet. We all know that there's pieces of mail that come that can almost go right to the trash. And then maybe there's pieces of mail that you have to deal with, and then there's pieces of mail you just have to file because it's already been paid and it's just a receipt. So open all of your mail and just sort it accordingly, ideally the day it comes. So there again, it goes back to, do you have file folders, a wire basket? What system are you using? Is it something that's coming in as income? Is it a bill to be paid? Is it a check receipt, a cash receipt, or a credit card receipt, or a bank statement? So those are some of the categories that the book suggests, and I actually follow it pretty true, that those are the systems that we use on a lot of the farms I work with as well. So open it up, sort it accordingly, and then you don't have to deal with it until you sit down weekly and then go through and pay your bill or enter it in the computer, or maybe you enter it in the computer and pay your bill with the checks through your computer system. So the next tab on getting organized is managing your bills. And I kind of alluded to this a little bit earlier, but everyone wants to pay their bills on time and have a system that works to get them paid on time. The tickler system is actually a 43 file folder system, and it's in the picture there, and you'll note the picture has all different kinds of colors. It's not color coded, but know that on some of the farms I work with, the months are one color and the days are another color. So whatever works best for you. How it works is that you label a set of file folders 1 through 31, and those stand for the days of the month, and then an additional 12 for January to December. So let's say I'm actually recording this on October 23rd, so you'll notice I moved the tickler system to the 24th. So tomorrow would be October 24th, and that's the first file folder that you'll see. And then the following days of the month go behind it, and then you start with the next month, November. So you always file bills by the due date, or actually the date you want to pay them. So maybe they're not due till December 1st, but you know in your cash flow that you want to pay it earlier and just get it out of the way since you have the money already right now in your checkbook and have planned for that. So maybe you put that on December 15th and you put it in the day 15 because November is the next month, and then when you go, then you'll make sure that that bill gets paid by then. So during your weekly bookkeeping time, whatever day of the week that is, you're going to pull the next 7 days, pay all those bills, mark them paid with the date, and if you're paying by check, I usually write the check number on them as well. And then you're going to take all of those days that you have and move them to the next month behind the rest of the days, and then whatever is in front of you should be the coordinating next week. So hopefully that makes sense. It's kind of actually harder to explain when I'm recording this now than what I think it is, but I think you'll get the gist of it, and just taking a picture of the tickler system, hopefully you understand that. And some people don't just use it for bills, but they use it for upcoming reminders or things that they know they have to take care of. Sometimes there's some production things. Sometimes it's crop reporting. If they know by a certain date they have to have it done, they'll stick the papers in there. So it can be used for a combination, but I like to use it especially to manage bills on time. So tracking amounts due. Keeping track of all your customer invoices might depend a little bit on the system you use again. If you're using a computer invoicing system, a lot of those help you track, as long as you make sure that once people are paying that you're going back into your system and recording it, usually recording the day they paid, recording their check number, or maybe how they paid. Is it coming in through a PayPal account? Is it coming in through a personal check? Handwritten invoice tracking systems can be just as useful, but you just have to make sure that there again you're tracking, was it paid in full, was it partially paid, or did they verbally say that they were going to pay it by a date. And then usually if that's the case, I'll kind of put the terms on that invoice so that when you go back through that you have a working document that you can remind them. Review your accounts receivable, and accounts receivable is who owes you money on a monthly basis. And that's just good business practice for you and those that you're doing business with. And then the bottom tip that I put on there goes to both of these bullet points. So when you have a customer sign a copy of an invoice at delivery, you keep it and you give them a carbon copy, and that's just saying, yep, they agree to pay it by the terms that are on that. Or if there's different terms, like I said, just making a note of it, making the date that they said they were going to pay by, so that everyone can be held accountable, and that hopefully you can get the money that is owed to you on time to keep your business running effectively. Some of you might have other tips and tricks too to this system, and we're always open to other systems that work. One of the last points in the getting organized is filing your receipts and other bookkeeping papers. So in the book, we cover 4 general systems. And there again, this is where file folders or hanging file folders, or however you keep track of them, are really helpful. Some farms will do it by vendor, and I just give an example of, you might have a farm and fleet folder. Maybe you have direct chicken customers, so those are people who are buying whole and have chickens from you. And those are going to be what you write on the top tab of that. The second way is you have it by account that they are related to. So this will go, I'm jumping ahead a little bit, but in the next chapter, the next module, we're going to talk about how to categorize and set up your bookkeeping system. So what are some of those accounts? Are they animal sales? Are they repairs? So let's say you went to Fleet Farm and bought a motor for a repair. Well, if you don't do it by vendor, maybe you do it by account, and so that receipt will just go into the repair category. A third way is just to file alphabetically by vendor name. So there again, maybe it's farm and fleet, maybe it's your local co-op, maybe it's some online sales. You just write the name of the company on that top tab and then file them alphabetically, so that when you're filing all of your receipts, it's just a really quick, easy system, and you know the alphabetical order. The fourth way is by month and year. So after you're done recording any income or receipts into your bookkeeping system, whether it's paper or computerized, you then just quickly tab the top of the file folder, the month and the year, and everything goes into that particular file folder, and then in the order, obviously according to month and year. This I see often done by month and year, especially when people have computerized record keeping systems, because then if they need to look it up by vendor, they can quick sort by vendor, and then if they actually need to pull up the receipt, then they can go to the month and year file folder to pull it up. So there again, it depends. Once you file these things, one quick thing might be, how often do you go back and look at receipts? How often do you go back to look at any income statements that come in? If you don't, keep it there again, keep it simple. Sometimes, I'm going to jump back to that second bullet point by account. Sometimes the repair file folder can get quite big, and so people will break it out into repairs by maybe equipment or infrastructure, or equipment and buildings. So there again, like anything I'm going to tell you, make sure it works for you and your farm, so that it's just the simplest and effective, so that it saves you usually a lot of time. So some other files that you might want to consider keeping: bank statements. Bank statements are helpful, obviously, when you're reconciling all of your books. Loan documents, any contracts, so those would be land contracts, sales contracts, any contracts that you have to fulfill, and then your tax documents. So keeping all of those neat and organized along with the rest of your systems is a really important aspect. Clean out all of your files each year. So maybe in your file drawer, we're getting, like I said, close to the end of 2018. So maybe January 2019 hits, you clean them all out and put them in a box. Office Depot, Office Max, any of those places, Amazon, have those really nice simple white boxes that you can buy. You can put all those files in, and then you can start your files new for the following year. And then, like I said, how often, the last question, how often will you need to access this information, is an important question to ask yourself when you're thinking about how will you file. Or maybe you ask yourself, how often do I go back now? And maybe you don't go back to some of those documents often now, but will you in the future? And those are harder questions to ask in the future, but just thinking of some of that and asking yourself ahead of time can save yourself a lot of headache right now. All right, so I promised I would talk about it. Hiring out your bookkeeping. There are definite advantages of doing your bookkeeping yourself or having someone in your farming operation that is connected directly to it. Usually, and I'm going to just say usually, we're going to find exceptions to all of these rules. If you or someone in your farming operation is doing them, it's more accurately categorized of the individual income and expenses. Like I said, it goes back to that oil. If you hire a bookkeeper, it's of no fault to them. If you don't give them any detail, that might go in repairs, that might go in feed, that might go in maintenance. You don't know where that receipt's always going to go. The other thing, if you're doing it or someone else is doing it, is usually it's done on a more timely basis, and you or your farm team can see problem areas or areas of concern start rising up maybe before even the month ends. Maybe you get a bill and something doesn't look right, or it's 3 times the price that you budgeted. Your bookkeeper might not even know your budget. They're just going to enter it in and keep moving forward, where you can raise a red flag and say, I think we might have to quick talk about this as a farm team, or if you're a sole proprietor, that you have to address it right away. So the disadvantage of doing it yourself is if it's not getting done. And we all know the importance of having good financial records and just keeping them up to date. So if it's not getting done, it would be a good and strong suggestion to at least explore hiring out your bookkeeping. So bookkeeping is a fairly standardized process, and so like I said, if labor, and usually it's time, is limited, it might make sense to pay a bookkeeper. It's important to develop a really good relationship with your bookkeeper because it helps accurately reflect your operation, your farm, and the information that you want to keep in track. And most of them are pretty good about helping you set up your categories, or maybe you already have them set up. You just need to help them identify what suppliers are what categories. Or like I said, you need to be diligent about writing in the memo of your checks or on the receipt of the bills and income, what is it for, what date, what company, all of those pieces, so that they can do the best job for you on the bookkeeping end of it. And then I always encourage producers to meet with them at least monthly. Print out that monthly report, go over it, look at it. Does something need to be recategorized? Do they have questions for you? Do you have questions for them? So that was kind of all of the bookkeeping pieces. Now I'm going to jump a little bit more into setting up your financial records. And I will say, keep in mind, I'm talking a lot about financial records. There's a lot of really important production records that go along with the financial records. So sometimes you're keeping track of that with the financial records and sometimes you're not. So identifying those gaps between production records and financial records, you may have to address that on your own farm and then figure out another system of how to get that information collected and where it gets collected and stored. So this is probably nothing new, and maybe it is new to you, but there are two systems or two different types of financial records. There's the double entry system or the single entry accounting system. Double entry accounting is what they're going to teach you if you actually went to school to be an accountant or have some accounting classes. So every purchase changes at least 2 account codes and sometimes more. Each transaction is recorded as having a debit and a credit. So the money is going to come in and it's going to go somewhere. So where is it coming in from? What account is it going to? And vice versa. Every time money goes out, it leaves an account, and what is it going for? Whereas the single entry accounting is just really similar to keeping your checkbook register, and hopefully all of you are doing that and not just relying on your online banking or banking statements. Single entry accounting allocates the amount of the check, cash, or credit card purchase to the different expense or income accounts. So I'm just going to use that example of we went to Fleet Farm, we bought hydraulic oil. So the account that it's going to get associated with is hydraulic oil is probably under your maintenance and upkeep. And if you're categorizing it by equipment, maybe you put it there. So it just depends on what that's being used for. So it's a simpler system, and you'll have one account code. Many of our computer bookkeeping systems now have already programmed this in to make all your debits and credits in the appropriate accounts with the single entry accounting system. So know that they've taken that into consideration and hopefully simplified it for us. The next step is setting up your chart of accounts, and this is what I talked a little bit about in the getting organized piece of it. So a chart of accounts is the basic tracking system so that you can itemize your income and expenses. Always start with the basic categories, and you can find those on your Schedule F. You can make your chart of accounts as simple or as complex as you desire. And there again, start simple. Figure out what questions you really want to ask yourself from a business standpoint, and then you can start making them more complex. As you start your data entry, you might find that you actually need to add categories. And so the example I just put in here was that you are selling calves and cull cows versus on your Schedule F, you'll just note that it says cattle sales. Well, maybe you want to track what was the breakdown of how much money did you get from calves versus cull cows. So let's say you have a beef cow-calf operation. When you sell the calves in the fall of the year, how many calves did you sell? What was their average weight? And then what did they bring in? Versus you probably might have some open cows that you're going to get rid of, or that you purposely didn't breed back because she wasn't a great cow, or she's open. And so those would go under your cull cows, but yet they're all cattle sales. So for Schedule F purposes, they don't care. It all goes under cattle sales. But for your own decision making, you might want to detail that and get a little more, split those two categories out. So be practical. Like I said, think about what questions you may want answered the next year when you are doing your planning. It's a good time right now. If you don't have a great system, what questions do you want answered? Try to put together your 2019 cash flow plan and see what pieces would be really helpful to get you to complete that. And maybe you have everything. High five to you, and maybe you don't. And so those will, there again, identify those numbers and systems that you want to tweak or improve or even start. Gave you another example. Seeds and plants purchased is also a category on the Schedule F. So that's you're purchasing it from someone. Well, let's say that we are growing vegetables for a CSA and wholesale market, and I buy some bedding plants just simply because I don't have the room in the greenhouse. And so you want to track every year how much you're spending on those bedding plants. So you're always going to have some seeds, right? You can seed some out in the field direct. You'll use some seeds for the greenhouse, but you know that you're going to buy some bedding plants. So you can always combine those two for your Schedule F, but for your farm and your decision making, you want those two separated. So I would encourage you, and part of the worksheet following this module will think about some of those things that you want to break down, some of the things that you can keep into big categories, and it simply works. I'm going to talk a little bit about asset, liability, and equity accounts. Asset accounts are used to track the value of significant items owned by the farm that have a useful life of more than 1 year. So an asset is anything you own that really could be sold. All of your assets also go on your balance sheet, which is one reason to keep them separate under the asset accounts. So examples are land, buildings, breeding animals, equipment. Those are usually the main general ones that we see. Intermediate versus long-term. So of that list, intermediate means it has a life of 1 to 10 years, and you're going to see that down in the liabilities. But so of the land, buildings, breeding, livestock, and equipment, usually it's breeding animals and equipment for sure are under intermediate assets. Buildings can fall under intermediate or long-term, depending on some questions there. Usually buildings and improvements fall with the longer term, and then land for sure is a long-term asset. Current assets also include bank accounts such as checkings, savings, and cash. So those are all of those what we consider liquid assets that are cash or could be turned to cash quickly. Liabilities are what you owe, so potentially credit card and loan accounts. Current are due within a year. So most credit cards are due within a year. Those would be current liabilities. Intermediate liabilities are 1 to 10 years. So let's say you have a loan on breeding animals. That would be considered an intermediate liability. And then long-term liabilities are any loan that the term is over 10 years. And those usually are all your land loans. Sometimes when you buy a farm, it's the land and the buildings. So that would all be wrapped up into one long-term liability. Loan accounts generally track principal and only track principal, and interest that's paid on those loans is actually tracked as an expense account. And know that you can deduct interest paid on loans on your tax on your Schedule F. We cannot deduct the principal. So keeping track of that is a really important factor. But when we're tracking these liability accounts, usually it's just the principal paid, and like that bullet says, the interest paid is going to the current year expenses. Hopefully that makes sense. Equity accounts track the money invested in or taken out of the business by owners and shareholders. So in a paper system, each of these accounts would have a portion of a page or a separate page in your record keeping system, and you'll just see it noted at the top, assets, liabilities, or equity accounts. Assets would be listed with the beginning of the year and the end of the year balances. So what are they worth? On the farm side, you'll hear the term cost or market. Cost is what you paid minus the useful depreciation of that, and market is what could you sell it for today. Credit card and loan balances will be listed in the liabilities section, and minimum of once a year or as often as you wish to update them. You'll note that what is their account balance. So same with beginning and end of the year asset accounts, do the same on the liability accounts. The computerized bookkeeping systems will guide you through this and how to set up all of your relevant accounts. And if you get confused or something doesn't look right, I would make sure that you consult the computer program company or even just a local farmer that you already know in your area is using it. It's important to get them set up right from the start. Otherwise, it can really throw off all of your reports and any decisions that you want to make if your reports are off. So entering data into the paper system. So setting up your spreadsheet. There's sample record forms from the Oklahoma Farm and Ranch account book in Appendix B of the Fearless Farm Finance book, or it's also online. And you'll notice that very bottom bullet point, you can print it off or you can download it. Make copies on 8.5 by 11 paper. You can also take the sample information and make it on bigger paper or a ledger book. Sometimes it just gives you more space and you can make bigger numbers and it's easier to see. Also there again, if you're going to copy it, it copies better once in a while. Or you can contact your local extension office and see if they have any blank farm record keeping books. I know through our farm business program we actually do, and so some farm business programs in your states might also. So check your resources. If you want to do a paper system, they're out there and available. So financial records and entering income. Money will come into your farm operation in many diverse ways. And it may depend a little bit on the enterprises you have and the type of farming operation that you have. So, for example, a dairy farm will have money coming in from milk sales, which a lot of them are coming in automatic deposits now from the milk plant. Some bull calves, some cull cows, and then some other miscellaneous, maybe some government payments, maybe some odds and ends here and there. But primarily 2 or 3 main revenue streams. Whereas a CSA farm, you may have money coming in from all different kinds of customers. Maybe you go to the farmer's market, possibly some wholesale accounts. And so the variety and the ways that you're going to take money in are just going to be different. So all farms take money in. It just depends on what form and how you receive it. So in keeping that in mind, sales of livestock or crops can be tracked by individual marketplace. And so I just put some examples there. So maybe there's CSA shares, whether that's paid weekly, all up front, maybe it's semi-annually. However, your farm has set up those payment structures. Farmer's market. If you're at a farmer's market, you may take cash, credit cards, check, some individual check. Direct sales can be all of those varieties as well. But you're going to be tracking them, or you can track them by the individual marketplace. When you're entering income, you're going to want to include the date that you got the money, where the income came from, what you sold, and the amount of income. And kind of going along with the what you sold, you may want to put in there how many bunches, how many pounds, something that you're keeping track of on the production side as well to match up with your income. And I'll go through a couple examples here in a minute. Totals for each of your accounts can be done monthly on one page or several months to a page with subtotals, and it just depends on the amount of activity within your farm. Like I said, on some farms, if you're a CSA farm and you're taking in shares, maybe you promote early sales of shares and you give a little bit of a discount so that you're encouraging more customers maybe to pay you by a certain month. Maybe it's February or March. So you have all of that coming in, and then you don't have as much money coming in the rest of the year. It maybe trickles in. So maybe on those monthly pages in February and March, you might have pages because each line item is going to be from who, the amount, the date, and any other special notes or instructions that you want, so that when you're looking back at these records that you have that captured. There again, I'm going to compare it to a dairy farm where you have pretty steady monthly income coming in. If you milk year-round, if you milk seasonally, you might see those wane off depending on what times of the year you're drying up. But you don't have a ton of checks coming in. You have one steady check coming in, so you may not need as many pages for entering income. Sorry, my cursor just wouldn't go and then it went really fast. So here's an example of entering income on the Oklahoma, and this is the example that's in the back of the book, looks something like this. So you'll see that this particular page is from January of whatever given year, and these are your receipts or your income. So the line on the very left-hand side, those are just numbered all the way down. Then you have the date. So the very first line is January 2nd. The second line is January 5th. Third line is January 9th. So the date of the individual day goes there. And it's January because this whole page is January. Then you put down the amount received. So that would be your gross amount. So total amount received from who? So the first line you can see there, line 1 is from Farmer Supply, and it was on January 2nd. They received $10,500, and it was for wheat, 3,000 bushels of wheat at $3.50. So you'll notice then, working our way towards the right-hand side of the page, you'll have sale of livestock. So we know that line 1 was wheat, so it's not a sale of livestock. Is it raised market livestock and livestock products? Nope, does not fall there. It goes under crop sales. So each farm will have their own individual what enterprises they have. And so on this particular farm, you'll notice they have wheat and soybeans. So the line 1 goes under the wheat category, and that whole check was just for wheat, which is why the amount received and the amount under crop sales are equal to each other. That's not always the case. In this example, all 3 of these actually are, but sometimes you may get, let's say those ABC Packer on line 3, that says 42 steers at 1,075 pound average, and they got paid $75.25 per pound or per hundredweight there. And so that's all steers, but let's say they might sell steers and or calves. So you'll want to break those out. And so the amount received will be a total number, and then you may need to break out the sale of steers and then the sale of calves as 2 separate numbers. Or maybe they sold their wheat and soybeans all on the same day, or they put them all on the same check if they're within a couple days of each other. So just note that when you're entering income, that you be very specific and detailed, because then there again, all your reports will reflect it, and then when you come back to make any decisions, it will help with those decisions as well. So just like entering income, you're going to enter expenses. Hopefully we have more income than expenses, but not always the case. Okay, so when you're entering all of your expenses, you have cash receipts and checks written by the date that you paid them. Credit card receipts should be kept separately from your cash receipts or your checks that are written. And then you want to enter your credit card receipts into an account book when the credit card bill is paid, but also along with that credit card liability category. Because technically your credit card is a short-term loan, and the money is not sitting in your checking. And maybe it is in your checking, but it's got to come out of your checking in order to pay the credit card bill, which the credit card had already paid for your items that you purchased. Each transaction needs a date, check number or number, how much you paid, who it was to, and then the amount in each of your accounts. So there again, I'll give you an example, and we'll walk through this example in this next bullet here. All of us have gone somewhere, and I just use the local co-op bill as an example, but whether it's Farm and Fleet or even Quick Trip or wherever you get your fuel from, you can get fuel and food, right? So this example is the local co-op bill, and the total was $170. So 50 of it was for feed, and 120 of it was for cover crop seed. So we'll want to make sure that those accounts get categorized right, and so we'll enter a 50 under the feed account code and $120 in the seeds and plants account code. And I'll show you that in the example on the next slide. Use a separate record page for each month. Now there again, I say that, and some of you may have months that you have a lot of expenses and it takes up more than a page, and that's fine. But once you get to the end of the month, whatever's left on that page, just leave and then start a new month on a new page. You can track all your expenses by specific parts of the farm, if you like, cattle versus crops. And then you can it's always easier to combine and have done the legwork up front when it's fresh in your memory, or you've got everything right in front of you. And then, like I said, we talked about some of those decisions. You want to pull the numbers apart for tax purposes or for total year-end farm. You can always put all of that stuff back together. Now, finally, the last bullet point, family living and personal expenses are kept on a separate page, but please, 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 please keep them. These are important numbers. These are just as important as your farm records and farm numbers. I've had a lot of families say, when we get to the end of the year, all of the farm income is accounted for, all the farm expenses are accounted for, and we still have a lump sum of money left over, and they say, well, let's say we have $65,000 left over. I'm going to assume that whole $65,000 is then family living if we've truly accounted for everything. And then they'll go around and argue with me that there's no way they spent $65,000 on family living. Okay, well, I don't mean to be a smart aleck about it, but it's like, okay, prove it. We need to prove where the money is spent. And if we're tracking family living and that's going on a separate line, it's very easy to keep track of and reconcile at the end of every week or at the end of every month, and certainly then at the end of the year. So here's the example on the expense book of entering expenses. So once again, we're looking at January, same year. And notice that on this particular example, you have all of the line items. So the line is numbered. Those are givens. The date is going to be what you write in. That's going to be the date that it's paid. The next column is check number. So those checks were all paid and written on the date to the left of it. And notice that this is a very nice and neat expense example. It all has a check number. Some of you now that are doing a lot of bill pays online, or maybe it's an automatic withdrawal, you may not have a check number, but try to keep track of, did that transaction have a number? Did that transaction have a confirmation code? And make a note in the check number what that was or how it got paid. Did it get paid with a debit card? Did it get paid over the phone with a confirmation number? There again, the more detail you can keep, the better you are. The amount paid, so that'll be the total check that you wrote out. Items, units, weight, and price. So those usually, that very first one is who it got paid to. And then from whom purchased on that category, you'll notice that they then, on this example, that's their detail. So it's kind of funny. They actually flip-flopped it around, you'll kind of notice. And that's fine as long as you keep consistent and you know what those things are. So on January 2nd, they paid Hotwire REA, which is their utility company, and that was their December bill. You don't actually see the detail of that expense because utilities is further to the right. Same thing with farm credit, annual payment. So that was, and then there again, you'll want to keep track of the principal payment because that's deducted from your liability. And then your annual interest amount is something that is an annual expense and you can deduct from your taxes. So go down to line 5, January 11th, is that example that I did on the previous slide. So farmer supply for fertilizer, feed, fuel, seed, and supplies. And that check was for $2,410.66. Now you're going to notice if you add up all of the numbers to the right of it, they may not all add up because I don't think we're seeing everything. So $677 of it was for feed. $481.01 was for fertilizer or lime. $564.88 was for gas, fuel, and oil. Note that some of you on your computerized systems too, and I think in the next module I'll give you some more examples of this. So for those of you who have multiple classes or multiple groups of animals, that $677 of feed, you may want to detail that out even more, how many pounds or bushels of feed that was, and particularly what group was that going to, so that there again, when you're doing an enterprise analysis, which we're coming in another module, that then you have the numbers and you don't have to keep going back and digging through receipts, so that it's all there. So there again, go back down, and so one other note to note on this slide is if you go down to line 12, which is on January 31st, they paid Handy Andy, I like that name, $1,205.01, and that was a paycheck. So you'll note that in their detail, the gross, they have the gross amount, FICA, FWT, which is probably federal wage tax, and then SWT, which is state wage tax. All of those things then are noted, so that if you have to come back, and there again on the computerized versions, you'll see those are all line items, and then on your reports, you will never have to come back and look them up. You could just print the report out. Like I said, this is one example of an expense sheet. Know that there are different examples in different formats. So the farm records in summary, the first part, if you remember, set up your farm business for successful record keeping. Make sure it's just comfortable, consistent, and then do it often. And the consistency part, if you do it often, you'll find that you become very consistent because you have a system, you have a way of doing things. It becomes more comfortable as long as you don't have a messy house office or a farm office. And I think you'll find it more enjoyable once you get into it. So like I mentioned early on, if something is not working, it doesn't seem like it's flowing efficiently for you, ask some other farmers. Don't be afraid to change up your system, but don't change up your system because you're not doing it often enough and you just don't have a system down. So make sure that it meets your needs as a farm, and then primarily at the end of the day, you can answer the questions that you want and then evaluate your own business. And those pieces are coming in the modules to follow, so I encourage you to continue watching. The last thing there, nothing improves without measure, and farm records is definitely, that goes without saying. So this is a module of the Fearless Farm Financial webinar. And to view all of them, you can follow the link listed there. We'd like to thank the USDA, National Institute of Food, Agricultural, Beginning Farmer and Rancher Development Program. This is being done through an award through them, and the number is right there if you want to see more details.